if I might. I want to ask you about margin requirements. NYMEX and others will say, we don't have evidence of unbelievable speculation. If it exists, it must be over on the dark side. It must be on the unregulated side. And they say increasing margin requirements will do nothing. Respond to that, if you will, Mr. Greenberger.
Oh, well, look, NYMEX says that because they treat investment banks and hedge funds as oil dealers.
They are not.
Yeah, of course they're not. 30% of what they to be oil dealers are Morgan Stanley and Sachs. So they say, wow, we look at the speculators and they don't include 1/2 the speculators. If you impose margin requirements, it's an unfortunate thing that we have to talk about this, but speculators should have increased margin.
You think it will be effective?
As Mr. Soros said, it's a last resort, but we're desperate right now.
Mr. Soros, what should the increase in margin requirements be? I believe the margin requirement on stocks is about 50%. I think on these contracts it's 5 to 7%. What do you suggest we do with respect to margin requirements?
Unfortunately, I'm really not an expert in the oil markets. I said that in my testimony. And so I really can't express a view. I'm just not familiar enough with oil trading to be able to say.
But Dr. Cooper, what do you recommend?
I want to make an observation. I did a report for Attorneys General in 4 Midwestern states, Illinois, Iowa, Missouri, and Wisconsin. We looked at the natural gas market, and much of my testimony reflects our early, this was in March of '06, a couple months before the Permanent Committee came out with a similar finding. The fascinating thing was that at the time, a puny hedge fund, and let's be clear, Amaranth was not a very big hedge fund. A puny hedge fund had accumulated a massive position in the natural gas market, and the CFTC and the FERC did not have a clue. They were completely in the dark about this going on. Now, as we've heard, a year and a half later, the FERC sort of starts to figure it out and finds these folks a little bit of money. And compared to these markets, it's a little bit of money. The simple fact of the matter is that you cannot let these people play. Enron loved its title. They called themselves asset light. And everyone thought that was the neatest thing in the world because, hey, if you don't have any assets, you can really fool around. The simple fact of the matter is that if we tie trading to real assets, we will discipline the heck out of people who are running around in these markets.
Just one more quick point. Because investment banks and others are taking large positions on this commodity where they have not previously taken positions, and then we hear, and I'll give you an example. Goldman Sachs says we think it's going to go to $200 a barrel. Is there an impression of anybody on the table that if you took a look behind it and you'd see people taking long positions on oil and then making statements, would that be surprising?
Goldman Sachs is very, very long in these markets. As Mr. Soros said, these banks have gotten into these financial institutions have dominated these markets, and they're on the long side. That's why the price is up. And that's why commercial users who need these markets can't use them because the price of these contracts are going through the roof.
Is it in their interest to predict higher prices?
Well, I don't want to. Let me just say from my observation, I find it highly ironic that when you control the price of crude oil, that you can comfortably predict it will go up from $135 to $200. I find that to be more than a mere coincidence.
Thank you. Another round of questions, but my time has expired.
Thank you. Senator Snowe? Senator Gold.
Thank you very much, Madam Chair. Mr. Greenberger, as I was listening to you rail, understandably, on the Enron loophole and how it's not really closed when it comes to crude oil, I was reminded of a forum that we had just a few days ago in Moorhead, Minnesota, where someone who had just your tone of voice, he was just a retired guy that was standing there and saying, Congress keeps saying they're doing stuff, but they're not really doing stuff. So what I want to get at right now is how we can really get something there. And you talked, and Senator just asked you a few questions about the Enron loophole. So from my understanding of this in your testimony is that the first problem with it, put aside the crude oil, was that the way the language read in the Farm Bill, you saw that it just put too much burden on the CFTC to try to get to the bottom of it, and tell me about that and what the problem is with that and how that can be fixed.
Before the Enron loophole passed, for 78 years, the status quo had been, if you trade a futures contract, it must be regulated. If you want to get it deregulated, the trader has the burden to demonstrate that deregulation will not lead to fraud, manipulation, and excessive speculation. The Enron loophole said to all the speculators, go wherever you want, you have no controls. The Enron loophole says on a contract-by-contract basis, it is now the burden of the CFTC to prove that each contract should be regulated. So it has to go through complicated administrative hearings, which I can tell you will be challenged vigorously by people who can afford to make those challenges, and will have to prove by substantial evidence that that contract will be regulated. Those decisions will be challenged judicially. It's a nightmare, and the CFTC said it knows of one contract over the thousands in this area that it believes should be brought out from the shadows of the Enron loophole.
Okay. Then the second thing, so it's to change that language with the burden, but the second thing is, while the language covered crude oil because of the CFTC's actions with these no-action letters that Mr. Ram was talking about, that is also an additional problem. And I think this bill was introduced, which is Senate File 2995, that attempts to fix that, but you don't believe that it would fix it. And you want to elaborate on that?
I have a lengthy dissertation on that. There is now nothing in the law that sanctions Foreign Board of Trades in the United States trading U.S. products being able to escape regulation. That legislation says if the CFTC finds the home regulator comparable, it's okay for them not to be regulated. The CFTC, in May of 2007, found the Dubai Financial Services Authority to have, quote, comparable regulation to the United States. So that legislation will sanction
what they did,
what is now, in my belief, illegal, and will soon, if somebody wakes up, be invalidated either by a private individual being hurt by it or a state attorney general. If you pass that, you'll block state attorney generals from getting rid of that loophole.
So your argument is, which you gave your idea to Senator Dorgan, but the idea is to put the words energy back in so that we can actually go back to where we were before this, what Dr. Cooper calls the foolish but affectionately called Enron loophole, got put into the law?
Yes, overnight that will bring down the price of crude oil, I believe, by 25%. Now, there has to be a grace period, obviously, but it would say that anybody in the United States trading United States delivered products must be subject to regulation.
And Mr. Ram, you presented an idea. Is your idea consistent with what Mr. Greenberger has been saying? And by the way, I think it's interesting for people to know who are watching this that a lot of people think gas stations have been making money hand over foot during these increased prices. And I think it's interesting to hear you talk about the fact that we need more regulation of speculation because, in fact, it's not true. Mr. Ram?
We are completely in agreement with rescinding the no-action letters. Because of the things that have happened to date. And you're right, petroleum marketers are going out of business, farmers are going out of business. We can't get the capital to finance our receivables. Farmers can't get the capital to get the money to operate their farms. Now, I know that the CFTC has put out an announcement in trying to help with the banking committee to try to free up capital for farmers, but oil marketers won't be able to deliver that fuel because they can't afford to buy it to have receivables for it either. So we'd be looking for some relief there also.
Okay, I just wanted to thank both of you because I can tell you I'm not going up and telling that guy yelling at the forum in Moorhead that Dubai is going to take care of him. So thank you for your thoughts and ideas, and I'm sure we'll be using them as we go forward.